go.
How's that? Welcome everyone to the March 26th, 2026, 2025, audit committee meeting. The new chairman of this, since the last one, is now the mayor. So I'd like to invite someone to provide an invocation or thought and maybe even lead in the Pledge of Allegiance. Do I have any volunteers?
I'll do it.
Okay, thank you.
So I guess given a recent email that I got, I think I'm gonna just skip a thought.
Okay.
Okay. So where we have our mayor here, our prior mayor here. So I was appointed to the council 60 days ago. I've been working hard at it. It's been an interesting process. And I just wanted to let Neil know that he was kind of my inspiration for serving my community. Because when he was running for mayor, I said, you're working full-time, Neil. How are you going to do this? And he was going to retire. So he was my example for stepping forward and giving back to my community. And you know what? It's been a lot of work to get kind of caught up, but it's been very, very gratifying. And hopefully I can continue to grow and help my city grow. So with that, I'll leave the Pledge of Allegiance.
Thanks.
I pledge
Allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all.
All right, so let's start with our consent agenda. Number one is to discuss and or have an action to approve the December 18th, 2025 audit committee meeting minutes.
I'll move that we approve them. I read them.
Okay.
I'll second that.
Second that. Okay, we have a motion and a second. Any discussion? If not, I'll all in favor say aye. Anybody else? Okay. Approved. Okay, active agenda. Public comments. Do you have anybody online? Would have been surprised.
The auditor.
Okay, auditor.
The auditor's on, so. Yeah.
So I'm gonna say no. Unless LT's got any comments back there.
No, sir.
So the next on the active agenda is discussion review of fiscal year 2025 to 2026 revenues, expenses, quarterly finances, and audit. So John, you said you wanted to do quarterlies first. Is that what you said?
I think so, yeah.
Okay. So I'll leave it up to Mr. Peter Brown, the financial director.
Okay. We're gonna go through this hopefully quickly so we can get to our 2025 audit. Our second quarter, I do want to point out there's a couple of sheets that I had to update from what was in the packet. So the slides on the presentation will be more accurate. Mostly just left a quarter out on a couple of the slides. So the first slide, just want to go through our revenues by fund by quarter. This is a percentage of budget. So if you look at those bar graphs, one is one quarter and one is the next, so it's cumulative. It just kind of shows you what we do in terms of business from one quarter to the next. Sort of the highlights of this is that half of our year is almost over. Well, half of our year is over. 60% of our revenue has been recognized, which is, as you'll see in the future slides, it's kind of typical this time of year. Our water and our sewer enterprise funds cumulatively are 56%. So if you add those two together, that's where you get the 56%. Our stormwater is 64%. And I will explain why in a second, why that's a little high. And then solid waste at 52%. So those are sort of kind of where we normally sit this time of year. Go to the next slide. This one is a revenue by fund and by quarter, but it's percent of budget. So revenue by fund, percentage of budget, 3-year comparison. This is so you can kind of look and see where we're normally at this time of year in the last 3 years. And so my first note here is that we had some grant revenues. That's what sort of is causing that fluctuation there in our general fund. Our Cherry Days revenues, we've attempted to do some better revenue recognition. In the past, we would kind of
Right,
wait, and then we defer it, and then it would kind of sit in one quarter. So we're trying to get it all sort of put in the right quarter, and that's sort of why you see it where it's sitting, which is better. So our aquatics fund, that represents just better performance. We had a hotter summer. Our revenues improved there. Our sewer, storm, motor pool, and police motor pool fund are all the rest of those there, from water all the way to motor pool. That is representative of a fluctuation in some of our asset sales. So we don't always sell assets every year. We sold them this last year, but the year before we didn't. And so that's kind of got this U-shaped curve to it.
in the motor pool in particular,
Pardon me?
in the motor pool.
Yeah. Yeah.
And like there are water trucks, so they're not motor pool trucks, they're water trucks, which is,
Okay.
yeah.
Yeah, it's not always just, yeah. Sorry, it's not just
Wonderful.
like Chevy vehicle.
Yeah, yeah.
Right? So that is our 3-year comparison for revenues. I'm trying to group these so that we're just gonna do revenues for a second. Any question on the revenues or?
Why is the stormwater up when we haven't had any events?
So this is the reason why we didn't budget our interest in the stormwater fund.
Mhm.
And so we have a lot of interest actual in there, but the budget was not established for that fund somehow.
Can I ask a question on the interest income? So you're talking interest income on reserves, right?
Correct.
When do we allocate interest to a fund and when don't we allocate interest to a particular entity? Or, so is there, I don't know, when do we do that and when do we don't?
So, yeah,
I was just gonna say, the way that, I mean, I've sort of followed precedent and what we've done before in the past, which is that when we take our cash reserve, and we put it towards our state PTIF account, we gain interest on that.
Right.
But in the past, we've allocated that interest to our different funds.
I've seen some, but not
Yeah.
all.
And I did a couple of months ago, I basically looked at our PTIF and I said, how is it spread in terms of, what's the fund balance in each of these funds?
Right.
And I used that to sort of do a percent pro rata on the basis of the cash reserves
So,
to allocate the interest.
so what you're suggesting is you're giving interest to anybody that has a positive cash balance? Is that what you're saying?
Correct. Or a fund balance.
Okay.
Trying to figure out the best way to allocate it. I didn't understand exactly how my predecessor was doing it.
So you're creating this yourself.
Correct. So I'm going, okay, how's the best way to spread our interest
Uh-huh.
over all of our funds?
Okay.
And for me, it made sense to use our fund balance, our cash fund
Okay.
balance.
Didn't
I would
Jamie
just-
used to give a breakdown of what comprised that? Our cash balances, it seems like on the quarterly statements.
yeah, you always asked her to provide those fund
Well, it
balances.
seems like the actual cash balances that we had
Yeah.
invested and in the PTIF. Cause there's a substantial difference oftentimes between what's in cash and what's in fund balance.
Right.
It would
Right,
seem
this
like
was
to
based
me-
off cash equivalent and
Yeah.
cash,
So you're saying cash.
not assets.
Yeah.
You said fund balance.
Sorry.
I'm saying cash.
I was gonna follow.
Sorry, it was the cash part of the fund balance, not all of the assets.
Balance.
Okay.
Yeah.
Which, by the way, I always throw out a word of caution because the city has become reliant on interest income. When rates are,
I've kind of noticed that.
when rates are kind of up and when they go back to normal. That could be dangerous because I've always said that should be what's used to build capital project or something instead of relying on that as an operating
Yeah.
For each of the
Basis.
accounts, yeah. So just a thought on that, because I'm kind of new, so I'll ask some stupid questions, I'm sure. But, if you're gonna allocate, just, if you're allocating interest on a positive balance, if they have a negative balance, are you charging them interest?
Who has a negative balance though?
I don't know. I'm just-
Shouldn't have a negative balance, because all of our, we would want to have positive cash flow in all of, or positive
We-
cash flow. in all of our
Okay.
funds.
We do have.
Maybe Cherry Days has a negative one, but it's minimal.
We've occasionally had like an interfund loan that would be where one fund owns the other one,
Yeah.
and we did charge them interest on that. I'm trying to remember, but I think that's been since cleared.
Okay,
That was an RDA to the CDA.
okay.
There was a transfer there.
Just taking a comment off what, our ex-mayor just mentioned.
Has been, you just call me.
Neil is what I usually call him, so.
You can do that.
I'm still having a hard time with this council person, but anyway. Would it make sense to say interest earnings as generally for the city becomes a pooled asset to be used by the administration and not necessarily allocated?
I think that's up to the legislation, right? The council to decide.
It-
Yeah, just a thought.
It is a little bit up to the council. We do try and make sure the enterprise fund money
I would
stays
agree
with
with that.
enterprise.
I would agree with that.
But anything, so in theory, anything motor pool, general fund, Cherry Days would go into the general fund interest pot that could be spent as seen fit.
So are you saying we're doing that then?
I believe that. So in the general fund, there's an
Okay.
interest line.
Okay. So
And then, but then like CDA and RDA have their own interest line and thing.
Okay.
But I think Neil's point was, is that, do we budget for that? I
Yeah.
guess that's the question, because if you budget for that, then, and it's lower,
Yeah. I
then you have to
agree.
make it up. So, but at the same time, if you don't budget for it, then you have a positive, well,
So I,
luckily, a
so
positive.
I like that idea as being a discretionary fund, if something popped up, and I don't know if the city has a discretionary fund. I'm
Like-
not sure.
We really don't, except for our capital improvement fund, where the council has the ability to say, hey, this next year, we're gonna use this money this way. And then we do have our rainy day fund, which is the untouched reserves.
Okay. I'm just throwing out an idea on the interest earnings because that could be, I mean, that would probably be the least restrictive source of revenue that we have in the city, I would suspect. The interest earnings on.
Yeah, the only issue,
General fund revenues are unrestricted.
Yeah, the BNC is the only one that's
Restricted.
strictly restricted, yeah.
the only issue right now is that it is in the budget, and
Yeah.
it is like 200 grand.
Yeah.
Give or take.
Yeah. So that's part of the
I think
problem.
it's lower, but, John was pretty conservative when he initially set it up. So we didn't really tweak it a whole lot, but I think that we could use an actual sort of discussion with a larger body
Mhm.
on how to best sort of
Have a,
utilize that,
have a policy. on
how the
it.
spread should look,
Yeah,
you know.
Yeah.
Just
Just a thought, just a thought.
Okay.
Keep going.
Anyway, so that's, to circle back to you, that's why it's a little higher, because I have an actual amount recorded in there that wasn't budgeted. So. Next, slide is we're moving over to expenditures now. So like the very first slide that you saw, this one's just based on expenditures by quarter, so you can sort of see the difference there. Our cumulative expenditures in the general fund is about 42%. Our Cherry Days is pretty much done, although we're a little bit under budget from what we had projected. Which is good. Our aquatic centers, half of the year is over, we're 48% of our budget for expenditures. We'll gear up those expenditures again in May and June before our fiscal year ends. Our cumulative water is 64%, and then our sewer is 46%, and our storm is 36%. One might ask, well, why aren't those closer to 50%? Well, these are enterprise funds. We have a lot of large capital projects, and they sort of fluctuate throughout the year. Our solid waste is a little more stable,
Yeah.
because it's just garbage, and it's at 52%. Next slide. This one's a 3-year comparison. As you can see that just kind of gives you a sense of the spread between the 3 years. In our general fund, we're a little bit down because we have yet to transfer about $500,000 for a debt service fund, which I guess in the past we've done earlier. We haven't done it yet, and so that's showing that differential there. When I added the 500,000 in, it brings it up level with everything else. So that's the difference there. Cherry days, like I explained before, we're a little under budget from what we had predicted on cherry days, whereas the years before we were just right at the very end. So we were able to be a little under budget on that. Our aquatics budget is materially higher in 25, so we've increased the budget a little bit. But we also haven't spent as much as we thought we would at this time of year, so it's showing that that's why it's a little bit down. That's why their comparison is a little different. In our water fund, this goes back to our project fluctuations. We have higher budgets and higher actuals compared to budget, depending on when projects get started and finished over the year. For me, the way I look at like those enterprise funds with the project expenditures is to just sort of watch those and monitor those to ensure that we stay under budget by the end of the year. Or we have to do a budget amendment if there's a big project that comes up.
We had scheduled some repairs and improvements to the aquatic situation. Does that come in this fund or is it at a separate?
No, that's
capital fund or
in the capital fund. And we don't have it on this particular comparison list. We probably ought to. It wasn't something that I'd seen in prior years, but we could put that up on here as well. And probably should.
RDA stuff.
Yeah, so most of our enterprise funds, the capital is mixed into the expenditures. And most of the general fund, which Aquatic Center qualifies under that, the capital is a separate fund that we spend money out of. So it's more operational that you're seeing on the first 3 groupings, and the other 3 is a total department.
But we are spending those funds though towards that.
Yeah. Yeah, the new boilers are getting
200,000.
installed and
It's about what it was. 200 for the one thing.
200 for the playground.
Yeah.
And then there's another 1.5 or 7.
1.7.
Yeah. For new liners, new boilers, new
Pumps.
pumps,
So they're not
or rebuilt pumps.
Yeah.
Yeah.
And I think Steve, you asked me yesterday,
How about painting?
your concern is they got gonna get finished before the season starts. And I think they're on
Are
schedule.
they? That's good.
Yeah, because it's gotta open in the end of May.
The only hiccup we had is the liner for the main pool where the toy is, couldn't be installed in enough time for the toy to work together. So it will go in the fall after the toy is installed. But the lap pool where the diving boards are, the liner's in. And yes, you will still get the phone calls about the frog.
I won't.
Well,
We're gonna put your number on the website.
Looking at stormwater here, I just wanted to point out that we are waiting for we kind of budget for the community bond to start. And we just got the funding and the approval and the contract in the city meeting this week. So that should bring that expenditure up, and that should level that out before the end of the year.
The
So
community bond would.
community pond,
Oh, pond.
sorry.
I heard bond too, so I was like,
Yeah.
I had to think about it, and then, oh, he said bond.
It's all right.
It's retaining pond.
Yeah, I know.
Yeah, the one we talked about in council meeting. And so we've actually been waiting for a long time to start working on that, so we're kind of excited to see that project start forming.
And I know some of you heard it in council meeting, but we did get $1 million through an earmark through Blake Moore's office for that project. Cause the NRCS money fell through until this week.
Oh, now it's back on?
Now it's back on, but for storm, we're not using it, but we will for some rec and then,
Awesome.
the irrigation
Do you
when
have
they
to
need it.
reapply or are they just gonna take care?
We just have to tweak our, application a little bit for the design money now, so,
Awesome.
yeah.
That's
So you're
interesting. That
doubling
came
up?
back on with
Yeah.
the way the budget is.
Yeah, it was, yeah.
So you're doubling up there then?
Not as much as we wish we were. Originally, the storm was gonna be 100% covered by this project. But the delays have forced our hand to where we really need to get that basin moved. So, we're proceeding forward without the federal on the stormwater component, but not the others. So,
We're getting shown up by far west.
NRCS doesn't care about the earmark money.
yeah.
They don't care about the earmark money like it's a double dip. They don't seem to care.
No, they don't typically care as long as we do our match from a local level. Like they didn't care about the ramp money because ramp gave us some money for the recreation side. They didn't care because they consider it local funds. So,
Well, an earmark's not a grant, so probably a whole different ball of wax.
yeah.
There would be restrictions, I guess.
Yeah. So this particular chart is just to help you see revenues to expenditures. It's just a nice way to look at it visually to go, is the green above the red? Kind of a nice way to put it. Mostly it is. And going back to the water fund is the only one that isn't, but as I explained before, the expenditures don't always match up throughout the year, although the revenues tend to be more stable because you're collecting those fees month over month.
And specifically, we did 2 capital projects in one summer, which spans 2 fiscal years. So second quarter caught the tail end of that project. And we don't have a large water project starting this, between now and July.
You know what I think would be more meaningful on this though, is an operating statement. We talked about that instead of expensing capital stuff. I mean, I can see that against what we budgeted. But I've always wanted to see how we're actually operating in the enterprise funds.
Is that like an earned value management type thing? Or are you talking something different?
I don't know what the earned value management.
It's just operating revenue, so ignore capital. So it's cars, people.
Impact fees.
Yeah.
What are we collecting in revenues for services? And what's it costing us to provide those services? Because, you do see things like that occasionally where government on the individual statements has to show these capital expenditures until they're transferred on combined statements. I mean, it's good to know for budgeting against budget, but I'd like to know how we're operating.
Yeah. On those type of funds you're talking,
Yeah.
You have asked for that. We will have that next time.
Hey,
No, I would think that would make sense.
no power. I'm just saying.
No, I know, but I've agreed with you in the past and I just need to make it happen.
I know
So,
you got a lot of things going, but I do think that's
Yeah, it'd be more helpful.
important to know how are we operating. Because that's what we end up, to a certain degree, determining what the.
fees are.
What the rates will be.
Yeah.
what the rates
That's
will be.
exactly.
What funds would you want, were you thinking in particular, like the
The-
aquatic center?
No, the water, sewer, garbage,
Okay.
storm sewer,
Oh, okay.
where we're actually charging the
Yeah.
citizen fee to do that, because, you have 2 components. You have the operating thing,
Mhm.
then you have to charge some extra
Yeah.
to build the fund for
Capital or
for
project.
capital projects, like meters and
Yeah.
wells and
Yeah.
stuff like that.
Storage tanks.
And those are significant governmental activities that we're responsible for, so we should probably look at it the way you're talking to.
Just a thought.
Well, and the auditor and those folks will call them quasi-governmental. So that's why it'll show up in the financial statements. Because there are private water companies. It's just in our city, we don't use a private water company. So,
Yeah, and then one thing that's unique about, at least that I've seen, the other 2 entities I work for, in the enterprise funds, is like asset purchases and stuff take completely on the balance sheet. And you can see them anywhere, at least in the operating statements, of the entity,
Yeah.
except for in the government-wide financial statements.
Yeah.
And what we've done here is we've put the expenditures in, and even though it's an enterprise fund. And then we have an offset to take it out into capital, because that provides visibility for the public to see how much we're spending on capital.
Yeah.
In enterprise funds, where if you just did it with, FASB type, reporting, it would just be over on the offset ledger,
Yeah.
and you wouldn't be able to see that visibility. So that's kind of and I don't know what you guys did in Weaver State, but that's,
Believe me, I've spent 4 hours looking at financial statements and it reminded me how complex they are and how much overlap and redundancy there is on those.
I just have a question.
Oh my gosh, I recalled that now.
Do you feel like debit should equal credits? Because I was told that doesn't happen in governmental accounting.
When I reviewed, again, reminding myself how to prepare these, there is so much redundancy that it's confusing. And some of these entities fall into governmental activities and then government funds, and it's interesting. If you don't keep it straight, it looks, it's just very confusing. But I even got my little cheat sheet out here to remind me how to read these.
well, and so I think it goes back to his statement. I think it would be useful to pull that capital piece out.
Yeah.
Because that's where the strange accounting happens mostly,
Yeah.
so.
And on the other side of that, if you have operations and you have capital expenses in those operations, shouldn't you look at that? I don't know.
Well, to do it for a way that's meaningful, we'll need to take out the component of the rate that is tied to the capital expenses, so that you can see the operational revenue against the operational expenses. And that should make
That's
it,
helpful.
yeah.
Yeah, that's
We
helpful.
still show both, it's just that I think it would be a better practice to have it sort of segmented.
And then replace and,
All right,
what was the term of yours?
next,
The repair and replacement.
Repair and replace, yeah.
next slide. This is just a revenue total percentage by department. It's kind of like the first one is just a cleaner, it's just cleaner, so you can see the total percentage year to date. The two big things to note here are that, we had increased in some unanticipated permit fees. We had some permits that came in beginning of the first 2 quarters that we kind of didn't predict, and so that's helped bring those charge for services up a little higher than we had anticipated. Fines and forfeitures, we just have to rely upon our parking tickets there. Can't always control that. The miscellaneous revenues is really high, but it's a very small part of our budget. Dollar wise, we had an insurance payment that came in that wasn't budgeted. So that's why it's pretty high, but
So overall, we're looking ahead of schedule.
yeah, that last black one is what's most important here, is to see where we're at in all of our general fund revenues.
So-
We're ahead of schedule.
This might be a stupid question. Why don't I see sales tax?
It's part of general tax. It's just thrown in there. So you have property tax, sales tax, the gas tax
Oh, you're saying general tax?
is everything.
Oh, okay.
Yeah, it's everything.
Okay.
So. Okay, next slide. This is the same concept, just over 3 years, just so that you can see the difference this time of year. As you can see, our intergovernmental's down. We don't have we have some predicted, revenues there that have materialized. A lot of that's grants. I have I've got to chase down a BNC road fund report. I think I might be a little behind on that one. So that might bring that up when I get that done. And then as you just move forward, you can see it's fairly even, except for miscellaneous, that's why it's miscellaneous. It's not predicted. Some years good, some years better. As at the very total at the far end, there's the differences.
It's an observation, so because you have the way you're doing the bars, you don't get a sense of the financial impact totally on the city, because looks like we're over collecting on miscellaneous, but it's that much of the total budget. So just an observation on that.
And I try to do a logarithmic
Mhm.
to see it, because I think that would show better.
Uh-huh.
But at the end of the day, I opted for this total amount on the far end, just to sort of give you
Yeah.
how it plays out.
Okay.
There might be a better way to do this.
Mhm.
Okay, next slide.
So B and C road funds come in monthly or?
Quarterly.
Quarterly, or
So I might be missing
it
one.
might even be like, yeah, 5 or 3 payments. It's an.
Sometimes it's 5 payments.
So it will be interesting to see how the state covers that. This
Yeah.
next year they're cutting it, but they're gonna make up the rest, from what I understood.
That's also based upon population, right?
Yeah.
So we're gonna get haircut.
Just a friend.
Yeah.
Yeah, sorry, okay.
This last one here is our, now moving to general fund expenditures. This is our general fund by department. Overall, we're 42% of expenses compared to budget for the 2 quarters in. If you look at council, that's really high, but that's because we had an election and we have almost 50% of our budget in council is to pay the county for election services. So it's gonna pop that up higher than you would
We
expect.
didn't budget for it though.
No, we did.
Yeah.
But it's
We
just,
didn't budget enough.
well, no, the expenditures, yeah.
It's about over. There's not gonna be many more.
Yeah.
Yeah.
Yeah,
The timing of
we
it.
eat more of it in the first 2 quarters than we do in the last 2. That's the governing principle there.
Did youth council's in there too, right? I'm trying to remember.
It's in there, yeah.
Yeah.
The one that says, you know, so the other 2 that I didn't take really a strong look at the ones under 50%. I was looking more at the ones that were a little bit over 50%. And so I looked at the community events was high. And that's because our coordinator, our events coordinator comes out of that budget, and we just signed that contract back in the last quarter. And so that's a huge part of that budget. She goes out and helps us find money for our events. It's part of what she does. It's a revenue driving expenditure, so
But overall, we're in pretty good shape there, really.
yeah, I'm not too worried. And then that was sort of the only other one that was a little higher than I was excited about. So overall, that's where we're at. And the last slide is just the 3-year comparison. Again, you can see that first one is really due to the election. Probably the next one that had a little more fluctuation was the finance department. We had a dip because of staffing, so that's why you're seeing that larger dip. The rest of them, we charged the enterprise funds for art services as an overhead department. And some of those costs of the percentages on those have fluctuated year over year as we've sort of taken a cleaner look at how we service those departments. And so that's kind of changing how that's kind of come and gone. I'm doing another one of those look back on
About
that.
the overhead rate charged today. Does
Yeah.
that include all the administrative offices?
Correct.
It does.
Yeah.
Okay. Okay.
And so that's a big reason why you see any fluctuation in those sort of overhead ones, like HR, administration. The most stable one on there, which also is our largest in terms of dollars, is our public safety police. So that one pretty much matches year over year. And
I have a question on that.
yeah, sure.
On the police department, I think we've been down 2 officers most of the year, haven't we? So have their salary's been made up in overtime to other officers? Cause you would think that the expenditures would be less than budgeted. With down 2 officers, is that kind of, we've had to pay overtime
We have had to pay overtime, yeah.
on the deal? Then, Peter, did I hear correct? Are you saying these are net of the reimbursement or the overhead that Steve mentioned? He calls it overhead, we call it allocation.
No, it's gross. So,
That is gross.
and again, if if that's easier to see by pulling that out, then maybe we need to do that.
So is this net or gross?
It's gross.
So why would you?
It
pull that?
includes the credit to those departments.
Yeah, I think it'd be
expenditure credits.
best to see it without the credit there. To see what operationally is happening.
How do you allocate that overhead? Is it based upon what?
That's a really good question. So the schedule that I've used in the past was a percentage that I inherited. And so I actually been looking at,
A percentage of their hourly or?
correct, how much
salary
of their
salary?
time, if you take, for example, HR is a really good
Yeah.
indicator. And this is probably the easiest one.
Yeah.
How many of our employees are general fund employees versus enterprise fund employees? And whatever that number is, that percentage, you would allocate that essentially to those particular funds. That's probably an easier one.
And some of it, it's a little more, medicine man approach. I don't know how it's a little more less scientific is the finance department, and we kind of base it on how much time do we think, like the water department has a lot more invoices than the solid waste department does. So we allocate a higher percentage to them, even though so it's not employee based, it's based on utilization.
Yeah. And there's some different ways to do it. Some of it's a little bit like that. But like for the finance department, for example, I talked to my AP clerk today and I said, I did this in my past
Yeah.
position. I said, excuse me, how many invoices do you process for each fund?
Mhm.
Oh, sorry. And then do an analysis based on that.
So, just an observation.
Okay, sorry.
You're going through a lot of detail.
Stop.
Why wouldn't you make that simpler, a more simple process? And you just base it on the salary that they have.
Well, so
I would just say we're going through a lot of detail for
It's-
overhead allocation.
So having been involved with it it used to be just what is the finance department cost? And we're just gonna say, this is how we're gonna share it.
Yeah.
And the concern is that we're taking money out of the enterprise funds and moving it to the general fund. So we wanted to be as more scientific if we could to show
More
it.
exact.
And if there was a change, we could see year over year why it changed.
Okay.
The state wants a more like a supportive underlying schedule. So it can't just be manipulated. If you think about it, say you're under budget and you're like, well, maybe I can allocate a little more of John's time to the water fund so that will help his budget in the
Yeah.
general fund.
Yeah.
And if I just tweaked a couple of percentage points, no one's the wiser.
Yeah.
But if I have some sort of structure to base it on, then it can be defended. That's really sort of.
I like the idea of the overhead. I'm just trying to understand the level of complexity that you're like, that allocating overhead makes sense.
Anyway. So that's sort of the one of the differences there. And then the final, probably the big one there that transfers out is, again, that's that $500,000 worth of debt service that we haven't transferred out yet. So once that gets transferred out, that'll pop up to the average.
And that'll change the general fund total, huh?
Correct.
Which will.
It'll bring that up.
Closer
It'll
to the others.
Correct. It'll bring that up as well. So, and one of the reasons I like this kind of exercise, as much for you and for me, is it helps me catch things that I go, well, oh, I need to do that.
Oh, yeah.
I need to get that allocated
Yeah.
because it's not,
Yeah. Cause that was weird there.
yeah.
Why is it weird?
Yeah, here's these, yeah.
That's good.
We've actually transferred it out earlier than
Mhm.
in the last several years. We got to be consistent
Yeah.
and do it at the same time frame.
Yeah.
So.
I can appreciate that.
So that's it for the 3-year comparison. Any questions or comments on that part of it, or?
So are we seeing I know there's kind of an edict to push things out. I mean, isn't that kind of, with the tax increase getting kicked back? I mean, we've done some finagling to make it work, but there was also I don't know what to call it. You know.
We
tighten
kind
the
of,
belt
we
as
kind
you
of said,
can.
yeah, and a lot of that came in the third quarter, after we started getting numbers,
That's
but there has been a request that, hey, if you don't need it, like, and specifically with a heavy focus on training and some stuff, then let's not spend it. So.
Okay.
I do have just a question on that. With what's happening with fuel costs, and the city uses a lot of fuel. What do we anticipate that's gonna ding us over the remaining part of the year? Streets, public works, all those guys use a lot of
fuel.
fuel.
Police as well, huh?
Oh, yeah, the police,
Probably offset by the snow stuff that we didn't use.
In general fund, it helps with our snow, because I think we spent like 10 or 15,000 instead of 60 this year. But in the enterprise and police, for example, it will impact them because the officers have to keep their cars running when they're on shift, or their computers will drain the batteries dead.
and, they're talking about this fuel cost being around for a while in regards to next year's budget. I know the fire department, they don't use much because they don't use fuel while they're sleeping, do they?
We gotta keep our generators running to keep the air conditioning going.
Oh,
We do.
good point. Good point. I forgot about that. I forgot about that.
But, I
Yeah,
mean-
Mayor, good point.
We'll make note of that, I guess. Yeah.
I did, so we'll take a look at it in the last part of the last amendment for the year. We'll take a look at that as well as into next year. It's a good time of year to do it because we're in the middle of budget season, so.
Are we looking to budget a modest property tax increase? Sort of a large one?
We will, within a month, have an official statement from our budget officer on what we think the property tax increase might be. One of the hard things is we didn't get the 132,000 from last year, and we used fund balance to pay for those items. And so, we may see trying to catch that up as well.
In
So-
fact, when we get to the audit report, I'm a little anxious to hear when I looked at this, and I'm not, not saying I'm an expert on this, but, the excess revenues over expenditures for $1.5 million, which seems to be much greater than we anticipated in our budget. That's being the case. So what Councilmember Pulverall reminds us is, if we're conservative in our estimates or the opposite way, that causes us to have a property tax increase, but I'm gonna be anxious to hear the explanation from the auditors on that excess, because it was much greater. As I recall, we had enough to fund the capital projects this year with
What we rolled forward.
what we had forward, so you probably don't need to fund that its entirety this year, so I'm thinking you're probably gonna end up giving money back to the citizens, aren't you?
Roads.
Well, there's a law that says 35%, right?
Yeah.
Well, that's,
Of revenue,
Well,
Of
the general fund.
exclusive of,
it's what your rainy day fund is. I keep putting that in air quotes, but it's whatever your running balance is, right? Running balance. I don't know if that's the right way to say it, but so it's one of those things that so you have to put it somewhere, and usually it's either capital or in this case, probably roads, because we did take $1 million from the previous, or not previous year, but what was in the TUF fund. And so this year was 3 million-ish. And so next year, even with the $15, will only be 2. So if you add that another $1 million to that, anyway, sorry, I'm talking.
But it's actually might be a good segue into the audit.
Okay.
Yeah.
So I'm gonna actually promote the auditor to a panelist so they can speak as they see fit, but um, however you want to go through the audit, I can pull up the documents.
I've always contended that the public will let us get away with a modest increase every year. But these big ones that require a truth in lending thing are hard on,
Well, they all,
public. Yeah, right.
well, they all require truth in taxation.
Yeah, any increase requires truth in taxation, and you probably heard me, Randy, say 3 to 5% every year, and we'll make it work.
Yeah.
But
And then live with it. I mean, that's what the public believes.
I think last year was 4.5%, and the state said no. So
You know, Randy, and I think it's a higher probability that they can do that. Because I think we're caught up.
Well, you caught it
City,
up. Yeah,
I didn't catch this up, but.
You caught it up. You
Yes,
did, yeah.
But, you know, the reason we had to have those high things is because we had deferred so many things. And we'd underpaid our employees for so long that, you know, but I think we're in fairly decent shape.
Yeah,
now,
I think you did put the city on a lot firmer ground, but now we're there.
So, you know, the possibility of having more minimal increases is a higher probability. I haven't seen the budget, but you know, that's, you have to pay the piper sometime, and the citizens forgot for 17 years they didn't pay anything, right?
They used to pay less.
I don't think they had a property tax increase, was it for 17 years, John?
the only change in the property tax occurred when the fire district split off, and they took a portion of our property tax with them.
Yeah, I remember that when the taxes were gonna go down.
Yeah.
So that's your.
So is it?
This is interesting.
It might
Ron, are
be.
you online? Were you gonna comment on the
See,
audit report?
this is real, right? But
I am here. Yes.
Oh,
Rate actually, that's what it's the property tax rate actually went down every year.
So is it my turn? Do you want me to go?
yes, it's your turn.
Okay.
Thanks for coming.
say what I like.
Of course. Thanks for having me, and thanks for allowing me to be here electronically. My name is Ron Stewart. I'm the partner with Gilbert and Stewart CPAs. And we were contracted to do your audit for fiscal year 2015. What I'd like to do is just kind of quickly go through what we do as auditors, the conclusions that we came to, and how we came to those conclusions. There's really 3 areas that we look at in your city. We want to make sure that the financial statements are materially correct, that meet accounting standards, and those numbers can be relied upon. We want to make sure that the internal controls are designed, implemented, or effectively working. And we want to make sure that you're in compliance with state law based on the areas that we looked at through the state auditor's office. So those are really the 3 areas we look at. As far as the financial statements go, we take the trial balance or the books of the city, or the numbers of the city, and we perform a number of tests on those balances. We send out confirmations for cash, debt, and we'll send these confirmations to third parties to make sure that those balances match what they show, match our books. And like I said, we do that for cash and for debt. We do that for property tax revenues, sales tax revenues, most of your intergovernmental revenues. We do that with URS computations and allocations. And as anything else we can figure out how to send a confirmation to, we'll try and verify balances outside with a third party. In addition to that, we pull a number of invoices. We'll pull a number of invoices at the beginning of the year. We want to make sure that, or the beginning of the audit, we want to make sure that the invoice matches the check, that it's posted to the right period, it's posted to the right GL account, and that controls are being followed as far as approvals. We pull invoices for transactions that happen after the end of the year. So if an expense happened in June but didn't get paid for in July, until July, we want to make sure that those expenses are posted in the right period. So we look through those invoices and make sure those are appropriate. We pull invoices for fixed assets, for sales of assets, and anything else as we're going through the audit. that we need to pull an invoice for to get additional verification. We'll look at those. We do a lot of analytical reviews. We'll look at this year compared to last year. We do that at the beginning of the audit pretty extensively. We'll do that as we're going through the audit and looking at the individual balances. For instance, as we look at cash, we'll compare this year to last year, see if we can understand or make sure we can understand those changes and what happened during the year. And then as the financial statements are written, we do that a third time to make sure that we can understand that we've captured everything and know what's happened. There's a number of calculations on the financial statements related to depreciation expense, accrued payroll, accrued interest, URS calculations, compensated absences. So we'll go through and recalculate those balances to make sure that they are consistent with accounting standards. We pull, like I said, we do a number of other tests and procedures to make sure that those financial statements are materially correct and those numbers can be relied upon. Through those testing and evaluations, our opinion is, and if you look at the audit report, the second paragraph says, in our opinion, the financial statements referred to above present fairly in all material respects the respective financial position of the governmental activities, business type activities, each major fund, and the aggregate remaining fund information of the city as of June 30th, 2025, and the respective changes in financial position and cash flows, where applicable, thereof for the year then ended in accordance with accounting principles generally accepted in the United States of America. That's a unmodified opinion, a clean opinion, or the best opinion that you can receive. So in short, through our testing evaluation, we felt that those financial statements do meet accounting standards, and those numbers can be relied upon as what happened within your city during the year. The second thing we look at is internal controls. And we don't give an opinion on controls, but we do evaluate those controls to make sure that they're working, that they were designed and they're working effectively. If there's a portion of your city that didn't have any controls, or those controls were just not working at all, we would consider that to be a material weakness. And we would bring that to your attention in writing and verbally as well. If there was a portion of the city that had controls at one time, and those controls have been designed, but they just weren't as effective as they had at one time, we would consider that to be, or could consider that to be a significant deficiency. Again, that would be something that we bring to your attention in writing and in this meeting verbally as well. We evaluate those by interviews, walkthroughs, questionnaires. As we're pulling invoices, we're looking to make sure that those that the controls are being followed, that the assets of the city are being protected. So through our evaluations and walkthroughs and interviews, we felt like the financials or the internal controls have been designed effectively, and that there isn't any issues that we needed to bring to your attention as a finding or a weakness within your city. The third thing we look at is state compliance. State auditor's office asks us to look at certain areas within the city each year. Some of those we do every single year, and some of those we can rotate over a couple of years. As you can see, what we looked at this year was budgetary compliance, fund balance, justice court, restricted taxes, fraud, risk assessment, government fees, enterprise funds, tax levy, revenue recognition, impact fees, and the insurance, crime insurance. So the state auditor gives us certain procedures to perform, and we perform those procedures in these areas. Through our testing evaluation, there was one issue that we wanted to bring to your attention that's listed in the governance letter, is that the fraud risk assessment is required to be presented to a city council meeting. And through our testing, we discovered, it was noted that had not happened. And so that's a finding. Obviously, going forward, it's just making sure that those fraud risk assessments are posted in those meetings. We're recommending that you do that as you're doing your budget and everything else at the end of June. Just add that into it, so that gets on the agenda, gets done before the audit even starts, so there's no issues going forward. So that's kind of a quick review of what we do as auditors and what we did in your city, and the conclusions that we came to and our opinions. I'm happy to answer any questions or discuss anything if you have anything.
John, do we have to have a single audit report this year on the money we used to build this tank? Was that last year?
That was last
That
year.
was last year.
So we finished over to what, 750,
750.
750,000, where we had to do a single audit report this year, no?
That was in 2024 that we did that, yeah.
No fee.
Well,
So we did good, huh?
You did good.
yeah. We asked some questions on the actual numbers, or is he gonna go through those too?
I think it's question time.
And, so I was looking at page 7. Well, I must admit, I didn't get through all the footnotes, but, Steve brought up the 35% maximum fund balance. I think it's unrestricted fund balance, isn't it? It's not the total
Yes.
fund balance, it's unrestricted.
Correct.
Is there a calculation in here where we stand on that against the 35%? I mean, I saw of expenses, it was 42%, but I think the limitations on unrestricted general fund balance against revenues exclusive of the admin reimbursement, right? That, you can't include the reimbursement we get from the enterprise funds.
No.
They make you exclude that as you calculate your percentage, but I didn't see that anywhere in here. Is that in here somewhere?
No. No, the calculation for the 35% is with the state, and that's not included in the management discussion analysis.
Yeah, I was just wondering where we stand on that.
Yeah.
I did a quick calculation, and if, I don't know if in revenues is included the admin reimbursement. I didn't know that if it's in the 14.9 million of revenues.
Yeah.
But I was just wondering where
Yeah.
we're at on that.
Yeah.
Because we kind of said we wanted to say in that 27, 28%, I think.
It's gonna be required, I think.
With a minimum of 15.
That bill didn't pass.
That was Senate Bill 97, that bill got.
No, there's a separate one that graduated.
Well, and the
I didn't see that.
my color to it is that we had initially put our roads funds in our capital fund. Part of it's because part of it was,
Allowable.
well, it's allowable, but
Because it was budgeted.
I'll take some heat on that, because that's where my prior entity, we would put our roads, roads B and C funds in our capital fund.
Yeah.
But it was slated to be initially in our general fund first, and then it's supposed to transfer over.
Yeah.
So that didn't happen. So now we have this larger
Balance.
sort of balance that,
But that's restricted, right? You've got that
Yes.
unrestricted, so
yeah.
I just used unrestricted to calculate what
Yeah.
percentage we were.
Jim, as part of your audit protocol, do you calculate that compliance issue? Because I know the state auditors are the ones that kind of,
Yeah, they're hot on that.
It is.
mandate that.
I mean, as far as the fund balance goes, that is the calculation. That is one of the things we do, is calculate that balance. I don't have that number right in front of me, but I can go back and find that calculation and give that to you if you'd like.
I think that's important to take a look at.
It'll be important for when we present to council.
Yeah, yeah.
Well, and this is just if we were over that 35% number, then you would have issued a finding for
That
that.
would have been a finding.
Yeah.
Correct.
So we,
Yeah,
But-
we kind of set the threshold as a minimum of 15 and a maximum of 28 internally,
yeah,
so.
Can you give
Of course,
us
council
how that's
changed that with
calculated?
the-
I know
with
you
the
don't have the actual
vote.
calculation. Can you give us the parameters of how that's calculated?
Yeah, I haven't looked at it for a little while. It's based on the revenues of the current year.
Yeah, that's what I thought.
So
So it's 35% of the current revenues of the general fund or something like that.
correct, correct. It's just of the general fund. We're just looking at the general fund. All the other funds are not included in the calculation. So the state is
And I
just
don't-
saying for the amount that you're charging for general service revenues, they want to make sure that those, there's a reason for charging those taxes. And so
Right.
they've set that balance at 35%, saying that we want to make sure that you're spending those numbers or those dollars, or you're putting that somewhere where you know you're going to spend it in a reasonable time period to fund something that's going to be general, like, roads. Um, something
So,
that's
so when you say that, you're saying it's okay to make transfers before the end of the year
correct.
for those budget kind of projects, so you can get that balance down.
Yes, absolutely. Yep. Now
I
the
had another,
caveat is, and those aren't tested very as well, but the caveat is that those need to have some reasonable basis of why we're putting that money over there. Right? So there's a road on the horizon, or there's something that we're going to spend that money in the capital projects fund in a reasonable amount of time.
so I have a question. I was looking at the government activities on page 7 and the source of general revenues. I was a little bit surprised, maybe I missed something. It shows property taxes went from 3,866,704 in 2024 down to 3,452.
But it's not property tax. It includes something else.
But it says property tax.
I know, but the property tax is only 20 some 2.4 or 2.7.
It's 2.8, almost
So-
3. But
So is it the utility tax that goes in there too? That was the other question I had.
what tax would have went down by
Yeah,
400,000?
I wondered about that.
And it is labeled property taxes, so maybe that's an improper, but I think we're close to what, 3 million now? And
The current.
Just
Property
over
tax.
3.
That's
so what tax went down by
Again,
about 400?
I'd have to go look and pull into the detail and see what was aggregated into that account. But I can look at that for you.
Do we know internally what that might be? I mean, why would we see
Be in
it?
lieu, or is that not?
Which, you're on page 7?
Sorry, where?
So he's on page 7.
Yeah, I saw
Lower level, North Ogden City changes in that position, governmental activities, general revenues, property taxes.
Oh, okay.
See it there?
Yeah.
It's down significantly there.
Yeah, that doesn't.
That's
And I don't know why
that
anything
seems
would
odd
be
to me.
I remember,
included in property
Yeah.
taxes.
but I remember
be in
talking
other
about
taxes.
that last year, or the year before, that there was something else included in it because, yeah, our 20 or end of year 24, it was only 24.
Yeah,
Well, we'll
So-
assume you're correct on that, council member. So my question still is, what tax
Right.
revenue went down $400,000?
can I jump in on the process issue here a little bit? In
You're a
terms
council member,
of-
you can do whatever you
yeah,
want.
In terms of this,
You have a
I
vote.
have the highest level of respect. for
You have
You
two
know that.
votes here, and the rest of us are just here for the rock.
The challenges we have in our current process,
Let's do it.
we're using a third party accountant to prepare the,
Government-wide financial statement.
and the management discussion. So we probably can't answer that because he may have combined some things that that we're not familiar with.
But these are still our statements,
I know that. I know.
right?
Right,
So we should know what's in it.
right.
That's the kicker. And I
It's the process we're
wish
using.
I'd remember what it
And I
was.
know Peter came on mid, so
Yeah,
I'm not
yeah.
trying to be,
Yeah.
but it's just curious to me. I'm not aware of what, I mean, utility tax didn't go down, right, Don?
Yeah, it did a little, at least.
But that would fall under
My-
the other taxes.
My only caveat is that when I worked with
We don't know what's in there.
CPA on this, when you see property taxes,
Mhm.
he conglomerates anything that is a property tax in any of the funds, but it still shouldn't go down. And that's something I didn't catch. when-
Well, this is the government. This is not our enterprise funds. Is it?
No, but I mean, like, you have,
What other property tax would you have in the general fund?
no, I'm thinking of the RDA, that's a whole different thing.
Okay, you have the
Yeah,
like your trailer tax or RV, all those other be in lieu type taxes, those
That
go
would
down.
Personal property
Personal
tax.
property, yeah,
Those wouldn't have gone down 400,000.
but our portion may,
this is probably something I'm gonna have to ask Ben on. And see if he can get us an answer.
maybe not.
Yeah, and it's just highlighting the process thing we got going on, but
Right.
because he's preparing it, it's hard for us to respond to that.
So we'll have the answer for council.
We should.
And then, I have the utmost respect for our public safety folks.
Yeah.
I was a little bit surprised that the public safety expenditures went up 10%.
Yeah,
Because you guys are pretty conservative and I'm just wondering why,
I saw
because
that
we
too.
caught that up with the, the charge by the motor pool fund. They were substantially being undercharged for years, but I thought we caught that up
On page, he's looking at page 8.
under government activities,
Yeah.
public
And
safety.
you look at expenses and public safeties is what, almost $600,000 higher than the previous year. If you look street and roads, that's pretty significant increase
And
too.
public
know what
safety
that
would
is.
not just be police, by the way. It would include other elements of our budget that are characterized as public safety.
Still
As,
dealing with the
I
comparison.
know, but it's mostly police.
as what?
Yeah.
What else would be in there?
Find it probably.
Animal control, community.
But they've already
services.
been in there. They've always been in there,
Yeah.
right?
Yeah. I'm just saying there's more to it than just police.
Yeah. That should play the process, but
So, okay, let's assume that, there's something in there other than police. What went up 600,000? I mean, I know we paid you big money when you came to get you. I didn't know we paid that all at one time, yeah.
look at the streets and roads.
Well, I can understand that because
Okay.
we've been,
Over the prior year.
yeah, because what we've been trying to catch up on,
Okay, so that makes sense.
I think so.
I think so.
But I'm just curious on what would cause that to go up.
You'd have to go back.
Not familiar with sheets, so.
Maybe it's a misclass, I don't know, just curious. It's a curious little thing.
Right, just in terms of just process here. So for me, we have some very complex financial statements. The management discussion analysis is kind of the key element that I like to look at because it's highlighting the key elements that have changed. So if we don't prepare that, we get a little bit awkward in trying to explain it. If we're using a third party accountant to do that, it just, you don't know exactly what he's combined in there.
And once again, I would say, we cut Peter some slack this
And
year
I do too.
because he came in late.
Oh, absolutely.
Well, my
Curiously-
past experience, the auditors did the government-wide financials.
And that's fine.
Yeah.
But we still need to understand, particularly when we do an analytical review
Yeah.
or the management analysis,
Yeah,
as we read through that, I think we still have to have ownership of
Knowledge.
that,
yeah.
right?
Yeah.
And I understand it's a big job. It's
Oh, yeah, it's
huge.
huge. Yeah, I agree too.
It's really huge and I never could figure it out in 6 years I was doing it, but,
Here's my.
Because I'm looking at police right now and it didn't, just by looking at just police, it didn't go up that high.
Yeah.
So
well, I would.
they're throwing something else in there that we need to probably.
Yeah.
look in.
Okay, let's assume they threw something else in there. What went up $600,000 in the city? I'm not aware of anything that was budgeted to dramatically increase. So we just took your
Motor
money
pool
back.
could be
we
in
gave
there.
you, right? Took it back.
Yeah, maybe motor pool could be in there. Anything derivative.
But I think motor pool's always been, and I'm just wondering if that was allocated differently or something.
Because there's no motor pool line in there. It's
Yeah,
probably.
and
And that's fine, and I think to Steve's point in the management discussion and analysis, when you look at that,
that's ours.
if we have combined something differently, I think it would be good to mention that and say,
Yeah.
in the current year, there was a change in,
Yeah. We would have
blah, blah, blah.
highlighted that.
Here's a
Yeah.
suggestion, and I think it's going towards what you're saying, is that if we have give it a 2-page summary at a citizen level, that would answer a crap ton of these questions. Really, because that's an aggregate, you can push money into wherever and have all these things that may or may not, as long as you're comparing it against themselves to see where you're going. But if hey, 600K was used to buy massive snowplow, I don't know, something like that,
Yeah.
that in that summary, which is
Yeah.
something my wife can read and understand, not my accountant son, my wife, that, cause that's my comparison, because I
Oh,
can't,
yeah.
I kind of sort of know something. I don't know as much as this guy or
Yeah.
that guy, but I know.
More.
But I,
But something like that, so that we can stick that in front of this, or attach.
and maybe you wouldn't even include, if you had researched it and found out that was something odd, you might not even highlight that.
But that's a novel idea you came up with. That's a number.
I did, it was before you said it, then you started saying it, and you took over my idea, and that's fine.
I would-
Well, I didn't have any original ideas. I just stole everybody's.
No, I still am too, so don't.
So you don't see it in the itemization though.
But once again, I'm gonna, we cut Peter some slack
Oh, we do, and
this year, but I'm 100% agreeing with that. We've talked about that. In fact, Sandy City has probably one of the better ones that I've seen. That's, it's in layman's terms
yeah,
that somebody can read and say, here's what's going on in the city and here's what it's costing us.
and that's what this section is supposed to be for.
Well, that was written by an accountant, though.
And I
No
think
offense.
what we're dealing with, have the government-wide financial statements have a particular sort of,
They're complex.
you have to form it according to the state sort of rules. You have to, like, we have motor pool fund, right? But they have to combine that in a way that's comparable to other entities. And so they're putting it into different categories. And I just think we need a schedule that can sort of like maybe supplementally show how you get there. Does that make sense?
Well, but what you're saying, I'm not upset with you, Peter. I understand the absolute challenge you had. But what you're saying there, it's a reconciliation. I don't think a reconciliation should be in here.
No, it's not
But
reconciliation.
it sounds like a reconciliation.
No, it's just the support schedule that would like, so if you want to see that public safety thing, to be able to pull the points out of our statements that we understand,
That's a difference.
so that you can see how it adds up to that number on that statement.
Yeah.
That's all I'm saying.
It's like 3 million.
A lot of these numbers, what I did is I tracked the number in the management discussion and I tracked them to the statement. So the statement actually has these numbers in it. So it is being consistent with the statements. But again, because we have a third party person preparing it, it's hard for us to have the details of exactly what went in his understanding.
I don't disagree.
Yeah. So that's just this process, and I'm not repeating myself, and again, I'm not upset. It's just, as I went through these two, I'm having the same questions that Neil had.
Fuming mad. Just kidding.
Pardon me?
No, I just said you're fuming mad, and that's not being sarcastic, sorry.
I think the
Gotta elevate.
one thing that could be helpful is, there's obviously grouping schedules and schedules that show how he put those numbers together. It might be good for internally for Peter to have those numbers when Ben gets done with those, of which balances he added together in year to year to create these schedules.
Give me a
And if he has
spreadsheet.
that, that's probably going to help you quite a bit.
That's a good suggestion, but I don't, this year, just because of the awkwardness of the newness, he gave you some schedules, but they might not have understood them exactly how to get to these numbers. I don't know. But
Right.
this set of financial statements is so complex. Like I said, I spent 4 hours this afternoon reviewing them, so. Yeah, so,
You need to get a life, Steve.
well, a little insecurity is a good motivator, and I was a little insecure.
So you done over there?
Yeah, I'm done.
No, I'm just kidding. No, certainly, if you have anything else.
I'm not.
Just say shut up.
No, you're not done. Are you getting your
We're
floor?
on page 9, you're clear up to page
Okay, go ahead.
33.
You're on to 9. Go ahead.
Steve, I think this is something you probably looked at.
Yeah,
If you look at Mitch's page there, the general fund balance,
yeah,
and it shows, non-spendable, restricted fund balance, and unassigned fund balance.
Mhm.
And I think it's that 4,077,000 is what's used to compute the 35% ratio, I believe.
That's correct.
he said that was correct.
That is correct. Yes.
And, you can always use that restricted fund balance for things the council wants to set aside, in addition to what's in capital
Yeah.
projects.
So the
Yourself?
restricted fund balance is actually restricted by an outside party.
Yeah, the two-
So that would be.
But you
your
can
tax
restrict it
industry shields.
internally.
I'm sorry?
Do you use the term restricted if you do something internal or just assigned?
No, it's
What's the
assigned.
problem?
It would be assigned. If you're talking about the general fund balance, if you as a council decide that you want to formally restrict or to designate a fund balance, that's committed, and that's by ordinance, and then it's uncommitted by ordinance. If
And let me
internally you
reference-
if you want to just allocate something, that's considered assigned.
And here's what I think, could be used for, because we talked about this. When we talked about budgeting, we said we would set aside so much for future parks.
Mhm.
And I know that could also be in the capital projects for building maintenance.
Yeah.
Over time, we had, I think, what was it, 20%? John, what was it? We said we wanted to use X amount. There were 3 or 4 things there.
It was,
And if you don't put that in assigned, it gets lost.
Well, and then it becomes subject to the
Whim.
carry forward limitation too, if you don't do that before year end, right?
Well, I'm thinking if you internally assign it, it's still part of the 35% calculation.
I would say.
If you internally assign it,
I think if you internally assign it, you move it to the plant fund.
capital
or
projects fund,
capital projects.
but a lot of it is just like a maintenance stuff, And I don't know, John, if they've switched that over, but capital projects were for big projects, and it seems like we had, I can't remember exactly, I'd have to go back and look at
it
the,
was 70 to new stuff,
Oh, I wrote
20 to parks, and then they're like to playgrounds, and then 10 to buildings, wasn't it the?
for maintenance.
Yeah, I think that's a perfect.
But otherwise, I'm just making the point, we found out over time, didn't we? That it gets lost if you don't assign
If
it.
you don't assign it, if you don't internally designate that. When you internally designate
An
it,
idea and takes it.
when you
How
internally
much-
designate it, though, you can move it over to a different fund group, I think.
Well, you can, and I'm not exactly up to date like John would be on capital project things. That's kind of a 5-year plan where you have to identify, but I'm not sure that includes maintenance.
No, it wouldn't. We have this discussion, Peter and I, when you replace a panel of sidewalk, is that maintenance or is that capital? And we've been kind of trying to talk through that philosophically.
Because there's certain
department.
maintenance type.
Like maintenance.
Yeah,
And what I heard Peter say is that just because of the timing of things, you didn't necessarily get all the entries in to move it. It does internally designate.
Oh, yeah.
So that's probably why the balance is higher too.
That was my now.
So just the timing did allow us to get that taken care of. I would think before June 30th, but
Yeah, well, we're still within the 35% easily, no matter if it's,
yeah.
if it's moved
that's
or
good.
not.
And-
There is in here kind of the thing we've been asked for, the operating funds of the enterprise funds. And I think it comes back to the point that, I don't know who made this, but because when you look at the excess revenues over expenses in the water fund,
Mhm.
I mean, if I'm just a resident that doesn't understand the flow of things, I'm looking at that and going, well, wait a minute. How come you're making money in these funds? Well, because we build a certain portion in there to build the fund balance for wells.
Yeah.
Major expenditures, there's 2 components. We always do an increase for operations and how much we need to build that fund balance.
yeah, for those
the next
5-year, 10-year.
So if you have a $1.5 million balance, it's rolling forward to, yeah, I don't know how you,
See, I would argue again on that is that if you internally designated it for those kind of things, you move it out of that fund into capital project fund, or what, it's probably not the right terminology, but you get it out of there. So then it's not in your operating statement.
But you just can't willy-nilly transfer things.
So I don't know, that's what.
you can call it a roll forward amount maybe in the chart of accounts, just to sort of
I don't know.
give
Yeah,
us.
you have to identify, because that's what the state's afraid of, that people are just gonna move that out of there into another fund to meet the 35%.
But
requirement, but in essence, it's
if this.
substance, that's what it
If
is.
the administration sends it to the council reviews it and approves it. So it's consistent with the nature of those funds. And then moves it. You still think that's an,
Well, you can do that for capital things, but I'm just saying,
Oh,
I'm
yeah.
not sure you can do that for maintenance.
No, I'm just talking about capital.
How would you say, Nate?
Yeah, we do that all the time for capital projects. We take money out of the general, well, the city takes money out of the general fund and puts it into the capital fund.
But usually it's for something, not just.
Yeah, I mean, for an identified major
Yeah.
capital
Approved.
project, you know, like those type of things.
You're not saying that you would do that for the water fund though?
To do what?
If you have an excess balance in the water fund that you're mentioning, to do a similar kind of process there.
Well, and I'm not talking about the fund balance. I'm not sure you can do that because there's no limitations on balances in enterprise funds. I don't know, is there? No.
Okay,
No,
that's a good
not at
point.
this point.
That is a good point. That is.
Yeah,
a
I
good
don't think
point.
that, so there wouldn't be any need to do that, but.
Yeah.
So now I'm looking, here's my big question that I need to understand.
What
Gentleman's
page?
over there,
What
Page 17.
Page 17.
Yeah, that's.
I do think it's helpful for the auditor and people to see what
Yeah,
we're,
so
talking
when
about.
you look at this line called excess of revenues over or under expenditures. And it shows, and this is the general fund stuff, I think here.
This is changes in governmental funds. Yes, governmental funds are.
Well, and it's general fund stuff, general fund, RDA, aquatic, debt service, all these things are general
Right.
fund thing.
Yeah.
It shows an excess of almost $1.6 million. I'm not sure we budget, so if I'm a citizen, which I am now, I'm saying, well, why would you need any property tax increase if you're generating excess revenue? And some of it's intentional.
Yeah.
I think 300,000 is intentional. The rest might be unintentional, I don't know, but what happened? How did we get 1.5 million of excess revenues over expenditures? And I understand we could reduce that by 300,000 for the
RDA.
transfer to the capital projects fund, but how did we end up like that? Cause I don't think that was the plan.
And that goes back to we put the money in the wrong fund. We put it in the capital fund. They had us move it back, to the
Yeah.
general fund because that's where they want to see it first before it gets transferred over.
Yeah.
That didn't happen.
Well,
That's part of it. And then we had some revenues and I'll be honest, we're talking the February, March timeframe. There was there was a general fund property tax amount from the state report that we didn't capture. So when Ben captured it, we had to put that in there. So that increased our revenues. Those are the two big things that I saw that pushed that up.
well, I'm still really confused because this is after transfers. It shows a $602,000 transfer to the debt service fund and $539,000 to the capital projects fund. So this being all general fund includes those transfers.
But there was more. That's what I'm saying.
Well, but even if
Well,
you get,
but why would there be more to the capital projects fund when I knew that last year it was, but we budgeted 300,000, we transferred 530. There's this transfer of 539.
Versus B and C road funds. That's the,
Did you look at the bottom line fund balance? Yeah.
Net change in fund balance?
Well, I'm just saying fund balance in the year, last column, right?
Yeah, I'm just looking at the net change in fund
Yeah,
balance
yeah.
of $1,595,000.
But-
And I think it would be well to know what the explanation of that is because, being a
Yeah.
finance guy, I'm looking at it and I still don't understand. If that were the case, this is always to,
what, page 46, I
what
think,
page is this?
This
is,
is page 17.
kind of not dilutes it, but simplifies it, in my opinion.
What number?
46. I mean, you still have over 1 million. I think that's to your point, is that, all of that, the actuals, this kind of goes into more detail as to where things were plus and minus, so
I'm just looking at this,
right, the bottom line, and
the bottom line.
Yeah.
I mean,
So this is the number you're looking at, right? This 1.6 that I've highlighted here.
yes.
Yeah.
Okay, I'm just looking at last year, because last year it was a negative 3.8 million. So there's some, I wonder if there's something to do with a transfer between the years, because we obviously didn't go $3.8 million in the whole last year.
No, we didn't.
So there's gotta be.
Instead of this year.
Good point.
But there's, so we will figure out those, have those questions for Ben, and bring them back to the next audit committee meeting, because those two being that far off, I mean, now it's attorney math, $5.4 million swing in a year when our revenue is 14. I mean, so there's some accounting.
Well,
thing
yeah,
going
and
on here.
do you use this page or do you use the other page that I'm looking at farther back in?
Well, this just shows the
Right, but it's,
line item.
yeah, but it's telling you what the final actual is for over or under.
You're on page 46.
Yeah, and the old one, it's page 45. And, you know, the previous year, it was almost dead zero. And, you know, and I printed those out like year to year to see how much
Yeah,
it was going up and down. For a lot of times, it's been positive.
Okay, let's go with your number. On page
don't know.
46.
Yeah,
what I
It's 1,085,000.
What I found though is the numbers he has in the management analysis tied out to the financial statement, so it must be a presentation.
yeah,
of some-
to be honest, it's frustrating sometimes because like you said, some of the numbers don't match what our budget says, our budget document. And so that's what I was struggling with for the past 3 years, still struggling. So, you know, there's no way the only way you can do is come up with a sheet to sheet or year to year over analysis.
Yeah.
And so you just pick a sheet and go with it, to be honest. You know, whatever sheet you're looking at and
I
just
just think-
compare year to year to see
I
what.
think if we prepared the management discussion and analysis,
Mhm.
it would probably be
Yeah.
more consistent with
Yeah,
what you're asking for.
it'd be a lot less crazy.
Yeah, it would be, yeah. Then we would know and have that information when we have questions, yeah. This is not your fault, but yeah,
Did you look at
it's
it?
just the circumstances of everything.
Well, it's not the point out that,
You had
yeah.
revenue over budget 912. Which is interesting, but it's supposed taxes
That's not
increasing
nuts.
Oh, yeah,
after we shut it down.
we can make this better. Absolutely focusing in on that.
Okay, it's getting dark.
Are you done over there?
CPAs in the room here, don't they?
3.
I'm waiting.
There's one on Zoom.
Oh, CPAs.
So I just had a
Oh,
few, I have a few dumb questions, engineer questions. So on page 33, when we were talking about compensated absences, is that something that you're basically saying there's a leave balance
Yeah.
that people have, and that's what
This,
you have to track that?
the
That's the
state
same
makes
thing.
us accrue it as a liability, because
So
we
So it's,
owe it.
so it's just the same thing as a net pension liability. It's a magic
Different.
number that
Oh, yeah.
doesn't
Yeah,
necessarily.
correct.
Okay.
I hate that pension liability
Because
calculation because that's what. the
We don't have a
state-
million whatever sitting in our bank.
So the state retirement system has the liability, not us, but they force it into
Yep.
our financial statement.
Okay.
It drives me nuts.
And then page 35, I just had a question on, so RDA,
But it was that.
RDA, CDA. So, and I guess this is more a general statement than anything else. So we're burning down the one and then flipping to the other, but I guess at the same time, it's combined at this point? Is that?
They fall into the same entity, which is the redevelopment agency, so that's why they're kind of reported together.
Right. And I guess my only point is that, I don't know, it's just a general statement, but I would hope that we allocate things quicker, because the RDA was, to me, I looked at all the stuff that we could have done in years past, and we kind of waited to the end and said, oh, we gotta spend this. So to me, I think if we have a plan or something that, as we get enough, or maybe set some goals or something, but anyway.
And in the new CDA requirements is that we follow the original budget. The RDA didn't have the same restrictions, because in the 90s, the state code was not as sophisticated.
You don't know how long that was talked about over.
No, I don't.
Another
It'll be
question,
cleaner next
and then be my last question. The last page 65, Mr. Stewart, did you talk about this audit exception a little bit? I know you talked about the first one. Did you comment on this? And I might have missed that.
If you're talking about on page 65, so that is actually a finding from the prior year. So
Oh,
in 2024, there was a finding, and if you see the city's response, we are now in compliance. So there was no
I'm
findings in
sorry.
2025.
I missed that. So there was just one issue in the current year.
I missed it.
Correct.
Yeah.
I'll just read through it.
What was?
And if I
what
could
was
just-
it, Vine?
What happened is that our budget, our our expenditures went, let's see, now I got it backwards. We knew somehow the budget got shifted because our revenues went up, but we didn't increase our expenditures to match it in time. And even though it came out in the black, on a budget scale, we went over budget.
Vineyard just got hit for not properly reporting their capital expenditures or something.
Their gasoline cards was one of the things.
I can't remember what it was, but they didn't run it through the statements right, and I thought, I can't remember how we were doing that. Do you remember what Vineyard got hit for? I mean, it was a big deal.
Well, they had some RDA issues.
Something about how they spent. It was Vineyard.
And then I know the one big thing they got in trouble for was not properly accounting for their gasoline cards. So they were handing them out, not.
Yeah.
Like people could just grab one. Does that make sense?
Oh, yeah.
So that was the only one I know of. There might have been others. Huh?
That's frowned upon.
So I'm not gonna ask a question, I'll make a statement here. So while we've looked at some challenges we have, and I've done these interviews with all of the management and financial people for the last 60 days, I am the state of condition of our internal controls is outstanding. And I think that's reflected in this report. So bravo to the staff and to the administration for being conscious about keeping solid internal controls. So, I mean, that issue that we have there is, in my opinion, very extremely minor. So compliments there.
So the only other thing did you want to talk about, or it's just gonna happen that we're gonna do this earlier?
Do we want to talk about that now, or do we want to
I don't know.
Let Ron go.
let Ron go?
Yeah.
Let him
Do you have any other final statements there, Ron?
So I'll definitely go through, give you the calculation on how we determine the 35% and where you guys are in that. We'll also look and see if we can help you drill down on how we grouped those accounts together to present them on the financial statements.
Yeah, that'd be good too.
As far as the financial statements go for this year, just want to thank Peter. I know he was thrown into a really tough situation. It's always hard to get him midstream. We've thrown a lot of stuff at him. We ask lots of questions. So we appreciate his hard work in getting us the information so we can perform the audit. So just want to say thanks for allowing us to be part of it. And I'm available for other questions when I'm in front of my computer, can look up stuff more quickly. So please reach out if you have other questions.
Cool. All right.
Thank you.
Thank you.
Thanks, Ron.
Thanks.
Okay. Have a good night.
Nick. What are you pointing at me?
Yeah, well, whoever does the
I know.
2-page write-up, I do think it's important because when you look at the enterprise fund statements here, it's not the city's intention to just make money off operations.
Yeah.
It's the city's intention to build a fund balance for future uses, but when you look at that, you would never know unless you have that component
Yeah.
of what's in there for future needs.
Yeah.
Because, I mean, the water department shows like a profit of $335,000 operationally. They all show, other than storm sewer, which was a little bit
Yeah.
crazy.
I would think in that management discussion piece, that's where you would capture that.
Yeah, that's what,
Yeah.
2-page
You're
write-up
saying
is
there.
on it.
Yeah.
Okay. Any other?
Combine it with a CIP, maybe some sort of a CIP look forward. Would that help?
Construction in progress.
Yeah, where you kind of look at the 5-year plan and you go, okay, here's sort of the 5-year outlook. And I mean, I don't know if that muddies the water, but
Well, we do have a
Keep it
5-year
simple, but yeah.
plan to
That's what I was thinking.
increase the revenues in the enterprise funds to meet the needs that have been identified.
It also, yeah, it shows you if you have shortfalls as well, so that you have to
Yeah,
make
it
a
shows,
decision.
it shows how much, we have to increase
Yeah.
the revenues to do that, but I think that'd be a helpful tool for the council to look at that, because it gives them guidance on what they need to do, because to your point, if we really have that type of excess in the general fund, and we have that type of operating excess in the enterprise funds, the council ought to have that information so they can balance that to say, okay, what do we do?
Yeah, the
Yeah.
citizen budget committee is provided that stuff, and so they can see that, and that's something that they've been striving for too, is to understand all of that, and it's been a little bit crazy this year, but, I think they should provide some pretty good stuff in the next few months, so. Anyway, any more discussion? Go ahead.
No, so he's off, right? He's done. He's gone. Okay. So the last 60 days I've been talking, and first thing that I asked for was a copy of the audited financial statements, and they weren't prepared in January. And we talked about some of the challenges we had, and they were understandable. And so Peter and I had a discussion. I kind of run it by John a little bit, and looking at a process, because I think there's pretty tight protocol you can follow on this to get them done before the December 31st guidelines. So what I did, am I allowed to hand this out? Just to write up, am I okay with that? So I'm gonna pass this around, and it's kind of a draft, and it's only Steve Neighbors' draft at this point in time. But it was just kind of a protocol to go through. So I've been doing financial statements for a while. So essentially, and I think with this first bullet, and I'll be very quick and then you can look at it. It feels like and then you and I talked about it yesterday too a little bit. Feels like we do have kind of a pre-fiscal year end closeout process where we look at any entries we need to process to get them processed before you do your final trial, before you do the year-end trial balance.
To some extent, yeah.
Yeah.
A lot of it's more of a look back, but.
Yeah. Just to say, hey, let's look at this. Then for me, scheduling a pre-meeting with the CPA firm that's conducting the audit. So we know, so they know what our target is for getting this completed. And then they can tell us what they need from us to get it completed. And I thought we could do this in September, but in talking with Peter, it feels like that would be very difficult, but I would think that a target of December 1st to have the audited financial statements completed. So then we can present them to the council before we send them to the state. I would prefer to do that, John. I'm not sure how you feel about that, but to give them to the state auditors before the council sees them, it seems out of sequence to me.
Yeah, we would, that would be our preferences for this committee and then the council to see it before it goes to the state.
Okay, and then that third bullet is scheduling, and I'm not sure if this happened, but scheduling an open conference with the auditor, a formal conference. And that would happen, sometime in, June, maybe first part of June, July. And again, it's just going over the critical elements of the audit to make sure we get it done on time. And then that fourth bullet, just making sure all the personnel in the city knows that's the target. So we all have to work together to get that completed. The 6:30 closeout, ensure clean cutoff of expenses and revenues. I'm sure that's happening. Preparation of a 6:30 trial balance. Getting that completed maybe July 1st through maybe August 15th. We talked about that a little bit. That's probably doable.
It's doable.
Yeah. Submission of the trial balance to the contracted CPA firm on 8/15. I'm sure they would like that too, to be able to start their work. Schedule meeting with them. So this is the interesting part. We have this contracted CPA that's helping us, and it feels like that's valuable to me until we can get more established expertise on staff. And maybe that will never happen. I don't know, but I know Peter is studying for the CPA exam, and we're supporting him on getting that taken care of. And hopefully we get that established where we maybe minimize the help. But it felt like in my discussions that the interaction there, and maybe it was just because of the year, didn't quite integrate. Do you want to comment on that just a little bit?
Yeah, it was, I'm used to just working directly with an auditor, not with a third party. I felt like that third party sort of added time to the churn, if that makes sense. So that was one of our challenges.
Yeah.
When you say third party.
Our
Right.
contracted,
Put the financial statements together.
Yeah.
Okay, I get
And,
that, I get that point. Okay.
and he's the one that prepared the government-wide financials. And my experience has been, in nonprofit, I did it myself.
Yeah,
Since the last two entities I've worked for, the auditors they got the actual auditor who is doing the audit is preparing
that's so strange.
the government-wide financial statements.
That would be odd.
And I think part of it's because the expertise wasn't there,
It could have been.
you know? And so there was at least, either the auditor could explain the government-wide financial statements, or I could because I prepared them.
Yeah,
So having that third-party person there
Yeah.
and when I first received those, I had the same problem you guys had. I didn't understand it very well.
oh, yeah,
So,
Here's the issue. I mean, to prepare those things internally, like, I came from a company,
that's,
third party, we did all of our own stuff, but
Yeah.
we had a finance department. We didn't have
you had the
one or
staff.
two, we had
Yeah.
the staff to do it and the expertise to do it. But to me, I mean, these guys know I was a little bit unhappy when I knew the financial statements weren't gonna be filed on time, because I think for 6 years in a row, we did hit the first year I was here, it was late, but I think we had them filed.
By the 31st.
But here's the problem in my mind.
Mhm.
I mean, this is all good in
Yeah.
theory.
Yeah.
But you're working with these small CPA firms.
Yeah.
That don't have the staff, and they're having a hard time getting staff.
And I could sense that.
And so they're sitting here, they've got all these clients, cities they've taken on, because most of them, their major clients are municipalities or counties, and they don't have the staff to
Yeah.
do it. So, to me, if you want to have the assurances you're looking for, you gotta step it up to a different level of CPA firm,
Do you guys
Which
want to
is-
talk about what you're doing?
which is about 3 times the fee. I mean, when I saw what the
That's
fee
the
these
other
guys
issue.
charge us was, I almost laughed. I
Yeah.
thought, they can't be doing any work and only
Yeah.
charging a set
Yeah.
amount. But that's the problem you've got with these
Yeah.
local, small firms, is they're having a hard time getting staff, qualified
Yeah.
staff, and maintaining them.
Yeah.
And I would venture to guess that a big part of the delay was them not getting back to us. I mean, I know we had some delays
yeah,
because of the
Yeah.
newness of the position.
Yeah.
But I would say,
Yeah,
because when I was asking, Peter, I says, hey, December 31st is coming up here pretty soon. He goes, yeah, I'm waiting to get this.
Yeah.
I'm waiting
Yeah.
to get this back. So, if you wanna go with the higher firm,
So
but we know what the fees are in a higher
Yeah.
firm.
you said waiting for something to get back. So was that the
third party.
third party person, not this?
Which is the same.
well, and there was also this,
Thank
like,
guys.
we were slow on our impact fee report to the state. The state changed their entire, how they want their impact fees done.
Yeah.
And they made them a lot more complicated.
Hmm.
So I was chewing through that, but I felt like that they could have maybe got some stuff ready to go. But it felt like they were waiting for me to get done before they
Well,
would finish things up. if that
Here's,
makes sense.
here's the thing, I think, and you probably know more than me, is that if you see something that will either help you or make things more efficient, don't just go with the flow. And if it shakes things up, so be it.
Yeah.
If, and yeah, I always do the good, better, best. There's a, good way to do it.
Gallon Oaks Junior.
I know, and I always use it for some work, and then somebody glammed onto it, so now I. Another story.
Man,
Anyway.
he took credit for a lot of stuff.
Yeah,
Now he's
so-
taking credit for the profit statements.
Anyway, so. Can we move on?
I'm getting out of here before we get struck by lightning.
So my point is that if you see something that can be done, obviously either more efficiently, cheaper, yada, yada, obviously that works. But if there's something that, hey, we're not getting stuff done because we're nickel and diming us to death, good heavens, let us know that too, because that's
Okay.
the thing that, you know, like you said,
Amen, yeah.
do we need more training, get more staff, or is it, can we just eliminate? I'm not saying that, eliminate your position, we'll just fund everything else out the door. You know, I know there's other cities that just, it's everybody's, the whole financial thing is out. So I think that's horrendous, because then you have no
Yeah,
minimal control at all. You know, and I think the biggest thing is what we have now, how do we make it better? Best, you know, I mean, that's.
I'd like to hear what Peter says. What do you think about that proposed?
Well, we've already talked.
yeah, we have. So
We-
I wasn't go- I wasn't
Combined.
going.
I haven't looked at the details of it, but we've talked about backdating a little bit better. We are, I'll just bring this up. We are in the process of putting together, and it's time. We've had them for 5 years.
Yeah.
We're gonna do an audit RFP.
Yeah.
So we're gonna start that next month. I've done these before, so I have some familiarity with it. But I think what might be useful after your comments and then your comments is that in the RFP, instead of saying, tell us how much you're gonna provide your services for, maybe say, at option A, we can do this, and in option B, we can do this, and so that we can kind of look and compare apples to apples, see what the cost differentials would be. You know, I didn't ever see eyeballs with any of that auditor.
Yeah.
Or the financial
The financial.
helper either.
I saw him one day.
He contributed to.
But
And and all of these, so to the mayor's point, when we first got Kennington Christensen here, they spent 2.5 weeks on site.
Yeah.
Helping prepare the financials. They set up their own little mini office in our break room downstairs and worked with the finance director for 2.5 weeks. You know, and it was like right at like a week in August, a week in September or whatever. And you said, like, Ben came out once this time, again, to the mayor, to the
Has been. Just call me HB.
the emeritus mayor. I don't know.
No, Mayor, he was emeritus on me earlier today.
But
That's an old.
It's, and so that's what Peter and I talked about.
Your brains?
It was one of the things we talked about today, and we said, is it gonna take $45,000 to get the type of commitment that we know?
Yeah.
We can force the timeline.
Yeah, yeah.
And that's, that's $30,000 would
And
be
you gotta
defined
put that in the
budget.
contract too, that says, hey,
Yeah.
if you don't have it by this date,
There's
we're deducting
penalties.
this from your
So
fee.
if they know the date, they're going to, that's gonna impact the bid. But then we'll know that.
If they're waiting on a third party financial statements,
Well, in this case, they is they, right? Aren't they the same? group?
No.
I thought
they're
they
two
were the
different
same-
firms.
I thought they were the same group
No,
at one point.
One's considered ours, so it'd be like our CPA, our sort of,
So which of
our
the two
internal
firms?
guy.
Because,
Kensington,
Kennington Christensen and then Gilbert Stewart.
okay,
Gilbert
and
Stewart.
Kennington Christensen are the guys that put the statements together.
Yep,
Correct.
And that's like 19, used to be 19 grand or something like it started out. But I just saw a proposal from Tanner,
Mhm.
and I think the guys in this proposal, their partner was charging like $145. Tanner's $660 an hour for a partner. An intern, not even a staff CPA was 240. An intern was like 180.
Yeah.
But that, to me, that's the problem you've got, is these small firms don't have the resources. And I'm not sure, I've always wondered how thorough of an audit we're really getting. For the fee they're charging us, I mean, I always wondered what they're really doing.
But I think having a distinct schedule with the auditor company, the firm,
Planning,
and then the third party also, that's integrated into us more tightly than we probably ever had, so we can get everything done on time.
I need to better understand the outputs.
Yeah.
Then I think I
Yeah.
do understand the outputs.
Yeah,
I'm having the same issues you guys have had. I've tied the few things out, but
Yeah.
I'm still like,
yeah.
there's a particular protocol, the way that has to be sort of presented
It is.
so that it can be compared city by city by city.
Yeah.
that doesn't look similar to what I'm looking at day to day.
So, what
That's the
would,
kicker,
what
yeah.
would be nice is to get a third party CPA firm that helps us prepare, that helps train you too. So there's an element of helping you understand better, so they don't just drop off the statements to you.
I mean, my guess is there's a computer program they use where you put your trial balance in and it pops out
And it
the
could
way
well
that
be-
the government financials
and
need
it
to
could well
look,
be,
so,
maybe that is available.
yeah.
Yeah.
So,
But-
there's some things we can probably,
Yeah.
yeah, we can probably.
I don't know if this is
Chew
ethical or
on
not,
those.
but I could ask my son too. Cause he does this a lot.
He does it.
As long as it's a competitive bid process.
No, I just meant the fact when he does other cities or he did Pine View the other day. So I mean, there's obviously things that he's doing that somehow combine, and I don't know if he's just doing the audit or if he's doing the other stuff, but he rolls his eyes at me and I'm like, I have no idea what you're talking about.
I'm
But
telling you,
what is this? Yeah.
I have not, there is overlap with the university a lot. But I had to do a cheat sheet while I went through this the last 4 hours before I came here. And now I remember and recall how it's done, and they are complex.
Yeah.
You're right.
And these are more complex than the ones that I just came from.
Yeah.
So the entity I came from, I could understand them.
Yeah.
I could tie them.
Yeah.
So I don't know if it's just, there's a presentation difference and from auditor to auditor.
Yeah.
But I'm used to doing half of what,
Yeah.
like a Ben has done. And then the audit firm doing the other half of what a Ben has done. And so somehow we gotta figure out.
Maybe it's software, maybe it's having a third party that helps us with some, where you can integrate and work together.
Yeah, we have to.
Better way to, yeah, I think there's a better way.
Yeah,
to do it.
planning is good. We always used to have planning sessions with, but we didn't have a third party either.
Yeah, yeah.
You
I
know,
know.
we
We did it, so did we.
we had the accountability, but I would say, you know, I dealt in foundations and government entities.
I know.
I'm just telling you, these local CPA firms, they do not have the capacity to do the kind of audit that our city sides is doing. You've got to go with.
Yeah.
You know, I'm just telling you.
Yeah.
Who did Deloitte do? Deloitte did they do Weaver State audit?
Actually, we had the state auditor show up and do ours every year, because, you know, we were close. So we had to have our financial statements done by.
But didn't you have an external audit too? Didn't Deloitte do your external audit?
That was like 20 years ago.
So you guys didn't have an external audit.
We had, well, it was external, but it was the Utah State Auditor's Office that showed up.
So you didn't have an external audit.
It was a usually, they were harder than
Yeah.
Jennifer, I'm telling you right
But
now.
here's the problem. I mean, I'm just telling you, this
Yeah, we're.
this is the problem. The state's competency level is a tier below.
Well, I used to work there, so be careful.
That's what I'm saying.
Should I bring this together as a goal here? Okay. So looking for a motion to recommend approval of the fiscal year 2025-2026 audit to the city council for review and acceptance.
I'll motion that we recommend the approval of the fiscal year 2025-2026 audit to the city council for
I think it's
review
2024, 2025.
24,
Sorry.
25.
Fiscal year.
I'm just reading what it says on this document here.
So,
In the email, but I missed that on the agenda, so.
Okay.
I will amend my agenda and recommend the approval of the audit as presented today to be sent to the city council for review and
Okay.
acceptance.
second. No second. Do we have discussion? Fine.
I don't know, do we? Go ahead.
You're the chair. I don't know, do we?
Discussion?
Yeah, I don't think it's ready yet till we get the answers to the questions we had. I mean, how can you make a recommendation to the council? Not picking on you. I know you're just trying to get out of here, so I'm over.
We're gonna have questions.
Yeah, with, you know, your property tax is off six, I mean, that's why you do a review, because when you start asking questions, that's usually when things pop up, right, Steve?
Well, that's what happened, yeah.
What? And I don't think we have the answers to the questions. If I'm a council member, I'd want to have answers to those questions that we talked about.
He said he was gonna go get the answers,
Yeah, well-
but, yeah.
No, I was gonna say, if we bring the answers to the meeting, Maybe a subject to, sort of
Yeah,
a.
I'd say at least a subject too, but.
Get the answers
recommend
before you write.
approval.
And that's my question. We meet again in 3 months. By then, that'll be
Too
the end of June. This audit's gotta be done before the end of June.
It's done, it's submitted, isn't it?
Well, to the state auditors.
It's submit,
But it's almost irrelevant if you don't have it to the city council before that.
yeah.
Is your-
I'm saying,
So
you
how do
know,
we
they
get it to
don't,
the
doesn't have to
council?
come to this committee. We know what the questions
Next
are.
week before.
As
Huh?
long as
Yeah.
Steve and Pulver feel they've
Okay.
got the answers to those questions,
Oh, I agree. I thought,
Well,
yeah.
maybe a subject too.
well, I would say that I understand them much better now, but I don't know how he rolled them up into that management. I know the financial statements. I just don't know how he did it on the management discussion. We're gonna get more information. And I would say if he helped prepare those and he's in the council meeting, prepared to answer it too. Cause he's our agent.
Actually, that's probably really
Good idea.
good
He's our
idea.
agent, so he should be
And
ready
he
to.
told me he'd be here tonight too, so.
Yeah, so if he's our agent, he should be at every one of these meetings.
Yeah.
Yeah, cause he's our agent.
But Steve, wonder if you look into that 400,000, not that this is the case, but you've seen this before.
Yeah.
And it comes back is that it's either wrong or there was an embezzlement of $400,000. I mean, I saw that at Intermountain.
Yeah.
Some guy stole
Yeah, you did.
$2.5 million from their pension fund. That was uncovered because of an analytic review. Well, this doesn't look right.
Yeah. So the one thing that gives me some sense of there's some element of accuracy here is the auditors have to do the financial statements. They also have to look at that management discussion, so there's no errors in there. So he has given some assurance that there's accuracy in
The data.
the management discussion. We just don't know the magical key on some of those numbers.
Why they're, yeah.
Yeah,
What's the bucket?
so I'm not as concerned with maybe the extreme example that you're giving.
Well, yeah, it's not too extreme. I mean, you can just see time after time.
I know,
Enron had an audit, it all balanced out, right?
yeah, I
I
know.
mean, I've seen it.
I know, so that's why this is so important to get this right. Right, the whole process too.
You know, I would hope at least maybe the motioner amended that motion to say, you know, based upon getting answers to
Yeah,
the questions that were submitted here prior to council approval of the audit.
Would you amend your motion to say that, Ryan?
Or I
Yes.
just second the mayor's motion.
And then
No, I
you
like
would
the
agree with the
motion.
second?
Absolutely.
I like her motion.
Okay, you want me to amend the motion? Is that what? Okay,
To include,
So-
yeah.
I would like to amend my motion. And I would like to motion to recommend the approval of the audit, or no. Recommend that the auditor come back with the answers to the questions that were posed in the audit committee meeting tonight. And those will be presented to the city council with the audit. Is that what I'm supposed to say? I'm
You
confused.
know, I think it would be good to get those before the public, because we're not trying to hide anything. This is
Yeah, I
an open meeting, but I think that the answer, you're gonna create more questions than answers.
Have the answers ready so that they can be presented.
Well, I think
Yeah.
if you and
Yeah.
Steve get the answers to the
Yeah.
question
Yeah.
and they're good,
yeah. And Peter's there and the third party guy is there.
Well, the mayor's saying you guys should have the answers, so before the
Yeah.
packet through
Yes,
this.
yeah.
So you,
So if I'm saying that, I'm going to the meeting with the third party guy.
so essentially the three of you are basically gonna be the gatekeeper on when the audit gets presented to the council, once you're satisfied the answers have been found. Is what
more.
I think the,
Yeah,
Okay,
the discussion.
okay.
So we could table it and put it on and just put it forward. Does this committee have to
Well, it has to,
recommend it to go to the council?
I think so.
I mean, under our historic structure, they do typically make a recommendation to, so I think if the motion was the motion to recommend that the audit go to the council upon getting a answers to the questions to Councilmember Pulver, Councilmember Neighbor, and Peter's satisfaction.
Yeah,
That's just what Ryan said. And I would second that motion. That's exactly what you said. Exactly.
I was probably one.
And based upon that, I think you should go. You make
You're
a
gonna have
good
me
motion.
Thank you. I'm gonna-
Well, I would get an email.
Okay, that's a good motion. Good job.
Copy me on that.
Okay.
Okay,
Exactly.
I've completely lost control, of this,
I'm
but,
gonna be understanding.
I'd like to be
So-
there.
okay, moving on. You got public comments? There's any public on that?
You just need to vote on the
Oh,
motion.
sorry, you need to vote on that. Okay, so any discussion on the amended motion?
We're ready to vote.
Okay. Is it a?
You can do just voice vote, yeah.
Okay, voice vote, just all in favor?
Aye.
Yeah.
Any, okay, nobody against, unanimous approval. Okay. Moving on. So public comments. Did we have any more public? Katie was
Nope,
texting me. I don't-
nobody's on. They might be watching on YouTube,
Yeah.
but no one's on Zoom.
That's right. So okay, so we go over committee members, staff comments,
Yeah,
staff
we
comments.
needed Ryan to help set the new meeting date. I guess we could set it.
You know, could I make one comment? on
Yes,
that?
we're at that
We
comment.
really should have this meeting before we issue the financial statement. So it should really be, do we already have one in December?
Mhm.
We do.
So- so-
That was the plan. That's what we
Okay,
normally
okay,
do.
Okay,
But they
I'm
didn't have,
just looking at this and when we're
Yeah.
approving.
We're
the-
behind, yes.
Yeah.
they would normally do
So that works.
that.
Okay, that's your comment. I can have even more. I'm just kidding.
So in theory, the next ideal time, because July or June is pretty rough. I mean, you could do June on like the 18th or 25th. Or you could, but that is budget adoption season. So, or you could do July on the 9th or the 16th or 23rd. Whatever worked for the
Last year,
group.
we ended up going for the August, as I remember.
Yeah, so
But if you do July or August, then we're not gonna have another quarter to review. We'll just have the final year end.
A draft.
A draft,
Yeah.
Final year end.
which is
not bad.
which is what you've asked for.
Yeah, which is not.
Not a bad idea. If we do it in June, then we have to meet twice.
Yeah,
Do it in
it's still-
July, we meet once.
Yeah, I like that idea.
Mid-July.
Cause you'll have the.
July?
Balance. A rough-
So should we pencil the 16th of July, and
That's a Thursday.
that's a Thursday evening, and then we'll have Ryan confirm and yeah. So
You said 16th.
16th
At
of
6
July.
o'clock.
6 o'clock, this room,
Be there, be square.
Okay.
There should be for that meeting.
okay?
Oh, boy.
I'll bring my Blackstone, I'll cook it for you, so I don't have to sit in the room.
Get it?
Any more comments, John?
I'll move to adjourn if that's appropriate.
The only comment I had is I wish I had how many CPAs does it take to change a light bulb? But-
Almost as many lawyers.
CPA stand for.
Certified pain in what did you say?
Well, it's got paste in assembly.
Casey, any comments?
I get to go home and study the regulations.
Peter, any comments? No. Okay.
Sorry.
Okay, any other committee member comments? Oh, okay. We talked about quarterly meeting, looking for a motion to adjourn.
Move.
Okay, move second. All in favor, say aye. Okay, done.